Welcome back to our channel. My goal is to assist you in mastering your finances and building your wealth. And today's discussion will delve into the concept of effectively managing your money through the utilization of the 50-30-20 rule. Before we delve into the content of this video, I'd like to briefly share the results of a recent poll conducted about 2 weeks ago. Our subscriber base has grown significantly, with around 834 individuals participating in the poll. The feedback has been fantastic, and I'm grateful for your contributions. The poll centered on content preferences, with 30% expressing interest in personal finance topics, 22% in stock market insights, 18% in automobiles, 17% seeking knowledge about real estate investing, and 13% curious about online income generation. What's inspiring is that many respondents express enthusiasm for learning across these varied subjects. Your feedback guides our content creation, which is why we're addressing personal finance today. Now let's dive into understanding the 50-30-20 rule. Explaining the 50-30-20 rule. Wondering what exactly the 50-30-20 rule entails? Let's begin by visually representing it for better clarity. Imagine a pie chart. Half of this pie, equivalent to 50%, symbolizes your necessities. This rule revolves around budgeting and comprehending the allocation of your income. In an ideal personal budget, 50% is allocated to necessities, 30% to desires, and 20% to savings or debt reduction. With this visualization in mind, let's break down each segment and provide practical examples to aid you in evaluating your financial situation. Remember that we're dealing with post-tax earnings, referred to as net income. The 50% devoted to necessities encompasses essential living expenses like housing costs, whether mortgage or rent, groceries, health insurance, and utilities. Necessities encompass aspects that would significantly disrupt your life or those that are indispensable for survival, such as food and shelter. Transitioning to the 30% allotted for desires, it's important to distinguish wants from needs. Wants represent elements that introduce minor inconveniences when absent. They're distinct from needs, which are essential for basic survival. Wants may encompass shopping, dining out, and engaging in hobbies, activities that enhance your quality of life but aren't mandatory. Lastly, the remaining 20% is designated for savings and debt repayment. This section of your income distribution carries immense significance. Establish an emergency fund equivalent to 6 to 12 months of living expenses. This offers a safety net during unforeseen circumstances. Simultaneously, allocate this portion toward clearing debts, whether credit cards or student loans. A future-oriented outlook also encourages saving for retirement, an often overlooked endeavor with substantial future implications. While these principles may appear straightforward, their practical implementation is key. By constructing a monthly budget based on your net income and adhering to the 50-30-20 breakdown, you'll uncover how your funds are truly allocated. This exercise often reveals surprising insights. While this video may be concise, its significance is immense.